What's up YouTube, it's Louis here, hope you're all well. We're looking at Bitcoin today, and if you remember in yesterday's update we were talking about this double bottom over here, and we were looking at the certain locations it needs to break above and close above for this pump towards the 55, but remembering that we are in this downtrend, we are below this golden pocket which we rejected, which I gave to you on this channel. If you weren't here around then, just make sure to subscribe and of course like and comment on this video to boost that algorithm. We are on the journey to 5k, so yeah, please do help us achieve that as soon as we can. But continuing on with this double bottom here. So in yesterday's update I was saying let's see for a close above the 20, that's a good signal, but although this is a good start and usually a close above the 20, if we do see another daily candle close above the 20, we should expect continuation to the 55. One thing that may not allow that, although yes we are above the 20, that is the expected move. We need to look to the left because of the structure over here is giving us clues, and we can see a daily candle close over here and a rollover with a bearish engulfing. So if we zoom into that location and we check what the price is, so we can see that 16,900, very close to 17k. What I will say is that I can actually draw a box from this location to 17k, so I know that this is like an area of resistance. If we're clearing 17k with a daily candle close, then yeah, we're pretty certain we're going to head to this 55 and meet this double bottom target. What I would say is that this double bottom target may be beyond the 55. Can you see how if I drag this, when we do break out, can you see the target would be above the 55? So the 55 might not allow you to get up there. The reason why I'm saying this is because we're in this longer term downtrend, and in the past we've seen double bottoms failing, and I'll give you this as a great example over here. If we zoom out and go back to around January to April time last year in 2022, we had this large double bottom and we had a neck. Let me just draw a resistance of the range. So this is your range resistance. You can see every time we got to resistance, this was the first tap and we drew the line forward. We can see that we dumped. This was the largest dump. Here we dumped again, or two rejections, so a double top, and another rejection over here. You were putting in these higher lows, so that's why we said, okay, if we break this neckline, you have a double bottom, your target is up here. But of course, because we already put this lower low down here below this higher low, so we were in this bull market, of course, making these higher highs and higher lows. We didn't lose this low, so you have some sort of double bottom here, one bottom, second bottom. We started pumping back up, and on the way back up there we can see that we had a higher low down here. And so if you want to maintain this bullish structure, I know everyone back then was saying no, you need to lose this, but I was personally saying, guys, for me the bear market begins the moment we're closing a weekly candle or daily candle below 40,000. The moment that happened right there, I told you. So the moment, sorry about that guys, so the moment that happened, I was able to tell you guys. So with this double bottom here, we can see the breakout right there. We unfortunately did not meet it. The only reason we did not meet the target is because we put in that lower low. We did not hold that bullish structure. If we had closed over here exactly there, that's still considered a higher low, or we just call it a double bottom. Because we went lower, you have a lower low. So any bullish pattern that you see here, any bullish pattern, bullish structures, any pump, it's a bull trap. And so what was happening over here, and what I was saying back in January and April last year, is exactly the same sort of thing that I am repeating now. You see that you actually even broke out of the double bottom. You just did not meet the target because we already were in this downtrend. So any pump is a bull trap, it's a lower high. We should then make a lower low, and eventually we lost that low with this dump over here. So yeah, continuing down to here, it's the similar thing. Can you see how we lost this 5-month-long low, putting that lower low? You've already come back and tested it as resistance for the second time, because he actually came back very quickly, but this is too fast for my liking. I want to see it reaccumulating over a while, and I was telling you around that whole month the expectation is to eventually head up to this golden pocket and then get rejected, which we've now done. So now, although we're forming this small double bottom down here, and you can even argue, we spoke about it in yesterday's video, this larger ascending triangle double bottom, this being your neckline, this could be one bottom, and this here could be your first and then second bottom, and we've got a large potential ascending triangle. But we need to actually close above the neckline up here at 17.8k, and we can see the double bottom target is not 17.8k, yeah, exactly. So even if we meet the double bottom target, let's do the aggressive target actually. Let's bring it down all the way to the wick down here. Even then, if it breaks out, it's still not higher than that. We need to break above that, of course the wick as well. But really and truly, if we want to see things flip bullish, we need to reclaim this 5-month support and take out that FTX high. Until then, and look at that, 21.5k. Till then, it's very risky. At any moment you can dump. Look at the 786 where that's tying into 20k at an amazing psychological level. This is an area where when we do eventually get up here again, it's an expected rejection area. So we might see these double bottoms forming. The smaller one here, if the bigger one does play out, it could actually take us up there. But again, look, it's saying, okay, once we get around 20k, that is the target. That is the target out of the double bottom here, lowest body candle close to the neckline. Once we break above the neckline in the future, your target would be 20,000. And once your target's met, then what? Then you stop. You usually create a pattern in the opposite direction. And so you can see that if we're starting to create a pattern in the opposite direction over here, this is lower than that. So if we're starting to create a bearish pattern over here, it'd be a bearish pattern forming on a lower high, and a lower high is part of a downtrend. After a lower high, we expect a lower low. So again, over here we had our lower low. Doesn't matter how high up we come, as long as it's below 21.5k, which we are at the moment, it's meant to be a bull trap. Regardless of this double bottom we could potentially be seeing, that could take us to 20k, okay? But that's step by step. That's not valid whatsoever at the moment. We've got a small double bottom here that's not valid yet. Although we broke above the 20 daily EMA yesterday, you still haven't broke through this red box over here. And this is your resistance for the moment, or your supply. That's why when we ran into it, we started rejecting it. So we're trapped between the 20 and we're trapped between this resistance over here. This is what's not allowing us at the moment to head to the 55. And if you are to take out this red box, we have a target up here to 17.6k, just a bit below, as you can see. And so you'd have to front run, if you were to take that. But I wouldn't, because there's the 55 in the way, and we know, look, we got above it and then we went back under it. That's a fake out. So now that we have this fake out, we need to confirm the 55 as resistance. So you went above it, it's not resistance. You went below it, it is resistance. However, let's prove that it is resistance. Let's form a bullish pattern, head up to it, trick everyone into thinking we're going higher, and then the 55 is just going to confirm you on this downtrend, and we get pushed back down to this neckline of this head and shoulders pattern, which I spoke about in the last few updates. Guys, I will be here tomorrow, so don't worry, I'll let you guys know. But the main focus for the moment is what is going on in this red box. Are we going to close a daily candle above it? Because if so, it does mean we should expect 17.6k. But I'm not foolish. I'm not going to ignore what's in front of me, and that's the 55. And this is an expected rejection point. For me personally, doesn't mean it 100% is, but my thinking is because we went above the 55, meaning like we went through it like butter, it essentially wasn't there, and we went all the way up here. But before the daily candle closed, we came all the way back down, and the next day we closed back under it. That's a very bearish signal. The direct next day, you didn't even come up to retest it. You went straight through the next EMA, and you've been struggling with this EMA, but finally today you got through it, and we're seeing this pattern, which if we can just break through this red box, we're going to get to this. But we just need to realize, because of that fake out on the left, the structure is leaving us clues. It is expected for me that we should get a rejection here and head back to this, and hopefully eventually breaking down and heading to lower price so we can accumulate at lower prices. Because to be honest guys, I am still anticipating lower prices to around 14k. Let's see if we can get down there. I hope you guys enjoyed today's video. If you're new around here, please do subscribe, share the video, because that's the only way we're going to grow this channel. There's too many people that are flip-flopping. No, we don't do that around here. If you enjoyed that, please smash the like button, leave a comment of appreciation. If you want to send in a donation through the super thanks tool, you can do so. And if you want education, just hit the link underneath this video, head over to my Twitter, and we can get you started, whether that's the one-to-one mentorship or the video course which you have access to for life. Thank you guys.